welcome back to another Crypto Dave video. So in today's video I'm going to be talking about a Bitcoin buying strategy. So a fair number of people on Twitter and on YouTube are asking, should I be buying now? We've had a dip recently, when should I be buying? How much should I be buying? Etc, etc. So I thought I will sit down and do a Bitcoin buying strategy, not financial advice, of course. And at the end of this video I will go through my the actual figures that I'm using for my own personal kind of buys. So let's jump straight in. And firstly, why do you need a strategy? And I think there's three reasons really. It makes the process simple. It means you're prepared ahead of time, and it removes human nature. So in terms of making the process simple, the market moves very rapidly, it goes up and down, and you have a big pullback, and then to be then sitting down and going, God, should I be buying now? How much should I be buying now? Will it go down further, etc., etc., is not a great way of looking at things. I think to sit down in the sort of like the calm of before these kind of things happen and going, right, this is how much money I want to invest. This is how much I would like to have by the end of it. These are the prices that I think potentially Bitcoin or another crypto could kind of hit. And then working out the strategy through that, whether that's through buying when you hit certain price levels or dollar cost averaging over a certain period of time. But it makes the process simple, and then you just have to follow through on that process. You're not making the decisions as you go away. You've already made the decisions and you're just executing those. It also means you're prepared. So when I say being prepared, if Bitcoin crashed to 50,000 tomorrow and 50,000 was one of the buy levels you were interested in kind of buying at, would you have everything in place? Do you have an exchange set up? What are the ways you can fund it? Are there limits to the amount you can fund? What happens if, and we've seen this before, if you're going to be using Coinbase, for example, to do your purchases, and then Coinbase goes down? We've seen this before when there's been massive swings in the kind of market and you can't actually get your orders filled. Do you have your stable coins or your kind of cash ready? How much can you transfer over? If one exchange goes down, can you use a backup exchange? Have you done all your KYC? Can you get the crypto back out of it easily? So making sure you're kind of prepared, not just from a point of view of setting your kind of target levels, but also making sure that the logistics of that, there's no point being tied up in multi-month positions on Pendle with all your USDC or Tether if you need it potentially next week or tomorrow or the week after. So being prepared in all those kind of facets. What exchanges you're using, do you have the access, do you have your funds available, how much can you move? This is another issue if you're trying to fund it from a bank account. I'm in the UK here. There are very strict limits in terms of monthly amounts you can move in. So getting everything in place, all your bricks in a row before the market hits the levels you want to buy at, is always a good idea. And then finally, it removes human nature. And I've been in Bitcoin for 3 full cycles now, and I have buy levels. I'll talk through these in detail in a minute, but my first 2 trigger levels hit in the last few days. So they were 65 and 62,000. Now, I'm not deploying all my capital by any means. These are the first 2 very small entry points. But when Bitcoin went to 65,000 3 days ago, whenever it was, my immediate thought was, I don't want to buy now, it's going to go lower. I don't want to buy now, it's going to go lower. Then it hit 62, which was my second small trigger. And again, I was like, it's going to go low, it's going to go low. I don't want to buy here. But as I'm recording this video now, we're at 64,000. It went then down to 60,000. If I hadn't triggered those buys, if I hadn't bought at 65 and bought at 62, if I sat there and gone, I'll wait for my 62 level to do it, and then when I get to 62 you go, oh, I'll wait for 60,000, and then when it gets to 60,000 you think, oh, I'll wait for 58,000, and then suddenly it bounces back and you haven't done any of your purchases in order. So that's what I'm saying about human nature. It's very difficult, and I have a plan in place. I know what I should be doing, but there's still that little voice at the back of your head going, it's going to go lower. You could buy more Bitcoin if you wait a few days. So I want to talk about 2 main strategies here, and then we'll talk about sort of like combining those in a minute. But the 2 main strategies I'm talking about are dollar cost averaging and target prices. So dollar cost averaging, as the name says, is basically you take the total amount that you want to purchase, or however much you want to purchase a week or a month or whatever, and then you split it over a certain period of time. So you might have 10,000, you say, right, I want to deploy 10,000 over 4 months. So that could be buying at the beginning of each month in 4 purchases, or it could be buying every week, so that would be 16, 17 purchases, or it could be even buying every day. And you come up with the idea, you work out how much you've got to deploy it, how long you want to deploy it for, and then you buy consistently every day or week or month. I think for most people it will probably be a weekly kind of purchase, probably most relevant for this, but some people buy every day, and you can set these up on a lot of exchanges, allow you to do recurring buys on a daily or weekly or monthly basis. So you can set these all these things up within an exchange as well. The only caveat I would say about that is that if you've got a large amount of money, it might be best to set your first month's worth or first few weeks worth rather than putting all the money on an exchange. There's counterparty risk. It's all sat there if something happens to that exchange, but also you're not utilizing potentially your money in the meantime. You're not earning yield or anything like that. The disadvantages of DCA is that you can miss out on big drops. So, for example, if we hit a low at or around October, which would be rough norm of what we'd normally do in a 4-year cycle, about a year after the all-time high, and we started dollar cost averaging, say, the beginning of July, so we're going to dollar cost average from beginning of July till the end of the year. Potentially we can have the next 3 months where Bitcoin price trends sideways or maybe even slightly up. We've then deployed a good chunk of our capital, maybe half of our capital. Then we get into the autumn, it drops down, 10-15%, and then we deploy in the second half of our capital at that lower price. But if we'd held and just kind of like bought lower, we would have been able to buy more. But then on the positive side, it does mean you avoid missing out altogether. So if you are setting price targets, I'll talk about this in a sec, and you don't hit those targets, what happens? You're entirely in fiat, and the price of Bitcoin has kind of like gone away from you. So the second way of doing it is to set target prices, and this doesn't have to be one price. You don't have to sit here and go, I think Bitcoin will go to $50,000, and therefore I'm going to, just have a one buy at $50,000, and that's going to be it. You could be buying on the way down. You can have several price targets. So you might have one at 60, one at 55, one at 50. You might have one at 45, whatever it is. And then you set your price targets up, set up notifications, or indeed you can set up the kind of trades. But like I said before, you might not want to put all your money onto kind of like an exchange because it's not doing anything useful in that time. And also, you've got that counterparty risk. So you set up notifications, or you might set up your first target price trade on an exchange, and then follow through. So this is in some ways the most difficult part. If you're sending out notifications, like I said last week, you hit that price target, but you go, a little voice in the back of your mind's going, it's going to go lower or it's going to go higher, whatever it is. So follow through, make your plan, but then make sure you follow through on that plan. And then the one thing you really have to think about here is what happens if prices don't hit. And in this way, you might have both a target price and maybe a date range set or a dollar cost average set from a certain price down. So let's jump over and I'll show you exactly what I'm doing with some of my buying. So you've got two tables here. You can see the one on the left is my table for Solana that hasn't started yet, and then the one on the right here is my Bitcoin target. Now these work in slightly different ways. They're generally the same, but they're weighted in very different ways. So if you look down here, you've got 6 tiers here for Bitcoin. Tiers A, B, C, D, E, and F. And then there's a trigger price for each one, and then there's a base buy at that price. So you can see here on the 4th of June, sorry, my first trigger price was 65,000, and I bought $20,000 worth of Bitcoin. That's the actual amount I got. Then the day after, it hit my 62,000 trigger price. I bought another 20,000. Now this third one, this band C or tier C here, that's actually this one here. So when we breached 60,000, so we hit that a couple of days ago, when we hit the 60,000, that basically triggers a dollar cost average for me, and that's going to be over 20 weeks. It's $4,000 a week, so that will be every Monday. I will be buying $4,000 of Bitcoin for the next 20 weeks, regardless of kind of price over that time. So this tier C is my DCA, so that's the trigger price, and then I basically buy it each week. That's 80,000 in total over the next 20 weeks. And then D, E, and F are again trigger prices and single entries. So 55,000, 100,000 buy, at 50,000, 120,000 buy, and then finally at 45,000, a 60,000 buy. Now, it may be that not all of these price targets hit, and if that is the case, what I do have some sort of additional kind of plans. So if we get through towards the end of the year where these haven't hit, I will just deploy it anyway over a small period of time at the end of the year. Solana works slightly differently. It's the same rough process, but I'm actually starting with dollar cost averaging. So I'm starting on a date. So I'm starting on the 29th of June. This is a Monday, so I wanted to start at the beginning of July, but this is the nearest Monday to the beginning of July. And basically I will be deploying $1,600. So this is a $40,000 total position. This is $400,000 for Bitcoin, but I will be deploying $1,600 a week every Monday morning from the 29th of June through to the 14th of December. And then I have 4 additional tiers. So this is $40,000 worth of cumulative buy here, and then I've got another 10,000 cumulative down here, and these are based on trigger prices. So this is 10% below our initial kind of price, 15, 25 and 35% below, and that initial price will be the price that I do my first DCA purchase. So if the price here was $70, for example, for Solana, then I would set my trigger price here 10% below $70, 15% below, 25% below, and 35% below. And again, if these trigger prices don't get hit, like some of the bottom ones down here on Bitcoin, I have a plan where as we get into December, I will just deploy this capital over the last 4 weeks during December. So that's a plan that uses both dollar cost averaging and trigger prices. So the Bitcoin one is triggered initially by hitting a certain price, whereas the Solana one is triggered by hitting a certain date. So I'm starting in July. That basically takes me through till then, getting fully deployed on my DCA by the end of the year. Hopefully I will get some decent prices towards the end of this, but it means that if we have a dip, say in June, July, and then we go up, we never get that additional dip in the autumn. I'm still relatively well deployed within that. So I hope that's useful to you. Obviously this isn't financial advice. You have to set your own targets, you have to set your own ideas. You know, a lot of people might say, right, I think we're going to go to 40,000, so these trigger prices might be different. You might be buying Bitcoin and saying, my first trigger is going to be 55,000, and then I'm going to buy all the way back down to 35. It might hit 35 at the low end. Same with Solana, you might have trigger prices to start it, or you might indeed have no trigger prices and just say, I'm happy starting now and buying for 6 months between now and the end of the year, and just dollar cost averaging in. So hopefully that's been useful to you. Let me know below if you have any questions. I hope you're all doing well. If you can give me a thumbs up and a like, that would be fantastic. Hopefully I'll see you on the next video, but until then, have a great day. Bye bye.